Hello, welcome to JS Services Strategy Recap. Today we're going to take a look at crude oil. Crude oil is in a neutral digestion market state, and the structure of that state, we have sentiment above the market, which is giving us a negative sentiment bias for the trade session. We are anticipating some difficult stop and go trading conditions with the market probing lower, looking for that digestive support. The lid is defined with the R level at 40.19, and so if we get a move above that, it will signal a transitional breakout, and we would expect more of a kind of an aggressive pop. But on the downside, it's more of a probe lower, and so instead of accepting breakout signals, we're looking to sell into reactions, and we could get a reversal signal off the downside pivot, the 38.44 level, which could spark a bounce back into more of a neutral digest. So it's a expectation of sideways to lower trade. Always like to look at the macro picture, so I've got the structure here on my daily chart, and we can see we have a neutral digestion expectation with sentiment above the market, so we're negative. We look at the last price action, and we had a lower close on the bar. Where support come in? Well, support comes in around yesterday's low point, so that's significant. And I've also posted our CRX minus, so that would be kind of the extreme area if we get a false breakout to the downside. And then we also have these lows here from March 15th. They come in at 37.71, so just above the downside target number 1. Take a look at the structure tab, and we can see that there's some conflict with the indicators where the sentiment's above the mark, which is negative, and we have kind of a slight positive bias from the shift. So the R level bias is going to trump that sentiment because we're still in neutral, and we can see the ADX is brown. And so whenever the ADX is brown, it's telling us that there might not be a lot of follow-through potential, which kind of matches up with our expectation of that kind of stop and go trade. Market's dead center of the neutral zone, could be a little bit of a mess. So let's take a look at the intraday action. So as we look at the intraday action, I've thrown on a moving average here, just a simple moving average to help to identify trends. And we can see from overnight the market has moved from our directional. We also know that the real selling energy is above the market here. Anytime we're in a critical range, and here's the top of the critical range, 40.19, the bottom of it, 38.44, the direction becomes kind of a rotational midpoint. So let's take a look at this critical range in a little more detail. Got the upside pivot defines the upper lid, DP the lower support. This is our area of indecision, the neutral zone, critical range. The directional is a rotational number within that range, so when the market's below it, it's leaning negative, and you should anticipate a move to the lower extreme, and we've done that in the crude oil. Another thing that's important about this critical range is it's broken up into microstructure, and we have what we call our critical range minus and positive, and our critical range extreme positive and negative. And these are interesting metrics, and currently we're at the downside pivot area, and the CRX minus becomes an interesting number because that's our confirmation of a breakout. If this market's going to break out to the downside, it's going to need to confirm below the CRX minus. So anytime the market moves into an area here and it stabilizes here, take a step back and see what is happening here at this CRX minus. And as we come into the U.S. session, we have this negative momentum, real pretty negative momentum. We're always looking at watching price action within the market structure. And I have here's our downside pivot, here's our CRX minus, 38.01, and here's our DT1. So we're always looking at price action within market structure, and the market is below the direction. What's our expectation? It's going to make a play for the DP. It does. It's climbing the staircase down, the market structure staircase, and it's holding negative price structure, and we're holding our moving average here. And we've attained that CRX minus. And one thing that caught my eye in this situation was the order book, where the order book was all lit up right into our extreme. And so you can see as we're coming down in this area, it's all lit up underneath, and then we get this liquidity shift, and it just doesn't go away. It just continues to build up. And it's all dark above here. The sellers aren't pressing it. And so this is a tell that we were going to get a bounce here. And now we do get a bounce, and now we're coming back down, but the liquidity is not moving out of the way. So I don't have these sinks, so I'm just going to move this forward a little bit together, and we can watch this. And we can see how the order book just stays there. And even as we push into it here, it just continues to build up underneath it. So it's pushing in, trades are happening, but the order book's still staying thick. This is a good tell whenever the market is breaking out to the downside and you have the order book building up at the CRX minus. Same on the upside, but you have it lit up like this. This is a good tell. And the darker it is above here, the faster you can have a move. And then it also depends on the market state, but we're in neutral digestion, so we are anticipating a digestive trade. What are the facts? Fact is the market is holding pretty negative aggressive structure here. This could turn into a pisser and just really release. The fact is we do know that the ADX is brown, so it takes a little bit away from that, and we also know that the market's been in neutral. It did have a slight positive bias, which is against the R level sentiment bias, but the sentiment bias is way above the market, where the real energy of the sellers are. And we are expecting this kind of stop and go trading. Those are all the expectations. So the only thing we have going for us on the downside is really this negative structure, which is formidable. But then when we take a little deeper look into the microstructure, we can see there's a lot of support resting here, and we don't have those sellers pushing it down. And we see the market, these buyers just did not move out of the way. You can see the variance here of the CRX minus, so we never took out that variance. Without understanding these metrics, you can start to get nervous here. Without understanding that there's big support building up here, you can get nervous here. But the market holds these metrics, and then we get a bounce. And we're coming into the the downside pivot area, and now we're taking it out. And this is where these metrics come in as well. We know that a reversal strategy needs to get above this area here, this alert distance. So I've added the alert distance metric on the chart. It matches up with the JS notes column here on the book map, the order book. And we can see, we did have some liquidity here. They just touched it. We're in a neutral digestion market state. Sentiment is negative. We can see that the order book is relatively dark, down to here. When this doesn't move and doesn't shift up, it's telling us something. It's telling us that the market's not that confident in this rally. And anytime you see this dark area here in the order book and liquidity not moving, it's pretty much kind of drawing a line here. Okay, this is the real support's down here now. This is where our focus. And we know we're not going to get a reversal trigger unless we get above this alert distance. And then the market rejects from there. It's pressing the extreme. It's pressing the extreme in a neutral digestion market state, and it's dark under here, and it's all lit up down here. This can happen, and you get that sharp break back down. But now as you're coming back down here, this isn't going away. So what is it? It's support. What's it good for? Well, it'll bounce back up to here. Where's the liquidity at? Actually, liquidity is back up here. So it's given us an opportunity, and we can define it. We can define our risk. And here, the market just pays us out another half APMD. Moves us right back up to the downside pivot with an expectation. So we come in the session. Our expectation is neutral digestion. We know sentiment's above the market, so we have this negative skew. We know we don't have a lot of follow-through potential. We know our strategy themes are more stop-and-go trading, working lower. We could get a reversal off the DP, but we have that underlying negative sentiment. We don't get a strategy theme to really engage for us, but what we do get is a classic price map signal where the market stabilizes off the CRX minus. We know that's the confirmation point for a downside breakout. We know a downside breakout is not that likely in this market state and structure. We use the order book to help us identify the support, really just show us that the market's supporting this. We're not going to see a breakout today. And then we get a nice bounce. And so instead of getting sucked into this negative momentum and selling it in the hole here and getting all emotional, oh, the market's going to zero. No, the market's already paid out big time. Sellers got paid out big time today, a full APMD and a half. We're coming in here in US hours. We have clarity that price structure is negative, but our expectations are that we're not going to see that much follow through in a neutral digestive state with the structure way above the market here. And then when the order book comes in and tells us that it's building up here, that's also our tell that the market might not be ready to break just yet. We still have that negative sentiment and we're still respecting it, but we could easily have a rally back up to the directional area and then fail. And so the market breaks our moving average here, gives us one little pullback to the top of this variance, and then we have a nice sharp rally, and they give us another opportunity to buy it with the order book not moving away. Being able to take something out of a market that sucked a lot of people in, you got that emotion to get them all stopped out. Now they're trying to get back in on it as the market's breaking, and they stabilize again and give you another good, just kind of quick move, and we're kind of all wound up, ready for the next session. Still working that negative momentum, nothing's really changed, but identifying the clarity that real sellers are up here, repressing the lower extreme. Where can it go? If it stabilizes here, we could move back up into this area, if not all the way here, and we're still negative. After we digest a bit overnight, if we're still trading weak and we start to roll over and we start to trade underneath the CRX minus, that's going to be a fresh negative signal. And all this digestive action, this energy, would give us even a bigger expectation of where it can go. And anytime we break out of the critical range, where it can go, well, it can go 2 APMDs down to 36.69. Again, it's just all about having good awareness, good clarity, focus on the facts. For more information, please contact us at info@jsservices.com and request a demo from jsservices.trade if you're not already a subscriber. Look forward to working with you.